Question 1. Which of the following is a primary reason why a business might choose to purchase cyber insurance coverage? A. To cover the cost of all business-related liabilities regardless of the cause. B. To ensure protection from cyber threats like ransomware and data breaches. C. To comply with federal regulations on data storage. D. To increase the amount of business assets covered by traditional insurance policies. Answer: B. To ensure protection from cyber threats like ransomware and data breaches. Explanation: cyber insurance primarily protects businesses against cyber threats such as ransomware, data breaches, and cyber extortion. It provides coverage for incidents where there is a financial loss due to these types of cyber risks, while federal regulations such as GDPR and CCPA may require certain businesses to implement specific data protection measures. Purchasing cyber insurance is not directly mandated by such laws. The purpose of cyber insurance is not to cover all business liabilities, option A, or traditional assets, option D, but rather to cover specific cyber risks that are not typically addressed in standard business insurance policies. Question 2. Mr. Jackson, the IT manager of a medium-sized tech company, recently discovered that sensitive client data was leaked following a phishing attack. He immediately notifies his manager, and the company starts reviewing the incident. According to Vermont law, what should Mr. Jackson's company do next? A. Notify the affected clients and the Vermont Attorney General within 72 hours. B. Only notify the affected clients if they report the breach. C. Contact their cybersecurity insurance provider and initiate an investigation. D. Wait for external regulators to initiate the investigation. Answer: A. Notify the affected clients and the Vermont Attorney General within 72 hours. Explanation: under Vermont's Data Breach Notification Law 13 V.S. SS 2005, businesses are required to notify affected individuals and the Vermont Attorney General within 72 hours of discovering a breach of personal information. This is crucial for compliance with state regulations on consumer protection and data privacy. It is not sufficient to wait for an external investigation, option D, or only respond when clients report the breach, option B. While notifying the cybersecurity insurance provider, option C, is a good step, it is not the first legal requirement, which is to notify affected individuals and the Attorney General. The law is designed to ensure that personal data is quickly protected and the affected parties are informed. Question 3. A large healthcare organization is considering purchasing a cyber insurance policy. The company has numerous data protection protocols in place, such as firewalls and encryption, but has not yet conducted an external audit of its cybersecurity measures. Which of the following is most likely to impact the underwriting process of their cyber insurance policy? A. The company's cybersecurity maturity and external audit results. B. The total number of employees working in the IT department. C. The amount of historical insurance claims the company has made. D. The company's involvement in a specific industry like healthcare. Answer: A. The company's cybersecurity maturity and external audit results. Explanation: in cyber insurance underwriting, insurers assess the maturity of a company's cybersecurity practices, which includes evaluating internal security protocols, e.g., firewalls, encryption, and the results of external audits. The maturity of a company's cybersecurity and the outcome of independent audits are critical factors because they directly influence the likelihood of a cyber event occurring. Insurers may offer discounts or more favorable terms to businesses that demonstrate a robust cybersecurity posture. The size of the IT department, option B, or previous claims history, option C, are typically less impactful than the organization's current cybersecurity measures. While being in the healthcare sector, option D, could raise specific risks due to sensitive health data. It is the company's internal cybersecurity practices that are more crucial during the underwriting process. Question 4. Which of the following best describes the purpose of third-party coverage in a cyber insurance policy? A. To cover damages to a business's physical property following a cyber attack. B. To provide protection against lawsuits from clients or third parties for privacy violations and data breaches. C. To cover the cost of recovering lost data after a ransomware attack. D. To reimburse the company for expenses related to employee training and awareness programs. Answer: B. To provide protection against lawsuits from clients or third parties for privacy violations and data breaches. Explanation: third-party coverage in cyber insurance primarily addresses the liability a business may face from external entities. This includes lawsuits or claims from clients, customers, or other third parties who are impacted by privacy violations, data breaches, or cyber attacks. Third-party coverage helps businesses manage costs associated with legal defense and settlement. The other options, A, C, D, relate to first-party coverage or other business expenses not covered by third-party liability insurance. Question 5. In the event of a ransomware attack, which of the following is most likely to be covered by a standard cyber insurance policy? A, the cost of the ransom payment demanded by the cyber criminal. B, the cost of rebuilding the physical infrastructure after the attack. C, the legal costs associated with defending against criminal charges related to the attack. D, the lost revenue due to business interruption caused by the ransomware. Answer: D. The lost revenue due to business interruption caused by the ransomware. Explanation: a typical cyber insurance policy will often cover business interruption losses caused by cyber incidents, including ransomware attacks. This coverage is meant to help businesses recover lost income when they cannot operate due to the disruption. While some policies may offer coverage for ransom payments, option A, or expenses related to restoring data, the most common and significant coverage in these cases is for business interruption. Options B and C are not typical inclusions in standard cyber insurance policies, as they relate to physical damage, which is typically covered by property insurance, or criminal defense costs, which are not generally covered under cyber insurance. Question 6. Scenario-based. Mrs. Walker, the CEO of a retail company, receives a notice from her cybersecurity insurance provider that the company's policy is up for renewal. The company has recently updated its security systems, including advanced encryption and multi-factor authentication. However, the policy includes a clause for coverage to be reduced if certain cybersecurity audits are not conducted within the last year. What should Mrs. Walker do? A. Renew the policy immediately and assume the insurance company will adjust coverage based on new security updates. B. Ignore the clause and renew the policy to maintain existing coverage. C. Schedule an external cybersecurity audit and provide the results to the insurance company before renewing the policy. D. Renew the policy and request an exemption from the audit clause based on the company's new security measures. Answer: C. Schedule an external cybersecurity audit and provide the results to the insurance company before renewing the policy. Explanation: many cyber insurance policies include audit clauses to ensure that businesses maintain a high standard of cybersecurity. If the company has not conducted an external audit in the last year, as required by the policy, it is important for Mrs. Walker to schedule one before renewing the policy. This will help maintain the desired level of coverage, as failing to meet audit requirements could result in reduced coverage or increased premiums. Option is incorrect because it assumes the insurer will adjust coverage based solely on internal updates, which is not typically the case without an audit. Ignoring the clause, option B, or requesting an exemption, option D, is risky and could result in inadequate coverage. Question 7. What is the primary function of a forensic investigator in the context of a cyber insurance claim? A. To assist in restoring lost data after breach. B. To identify and document the cause of the breach and the extent of the damages. C. To negotiate with the hackers on behalf of the insured. D. To advise the company on how to update their cybersecurity measures post-breach. Answer: B. To identify and document the cause of the breach and the extent of the damages. Explanation: forensic investigators are hired by cyber insurance companies to determine the cause of a cyber incident and assess the extent of the damage. Their work includes gathering evidence, determining how the breach occurred, and identifying any weaknesses in the system. This process is critical for the insurer to evaluate the validity of the claim and determine the appropriate payout, while forensic investigators may provide recommendations for future security improvements. Option D. Their primary role in claims is to analyze the event itself. They do not negotiate with cyber criminals. Option C, or restore lost data. Option A, which are typically handled by IT teams and specialists. Question 8. Which of the following is an example of an error and omissions EOR coverage under a cyber insurance policy? A. Coverage for financial losses caused by a data breach affecting client records. B. Protection for a business against claims arising from mistakes made in providing cybersecurity advice. C. Coverage for a company's lost revenue due to a network outage. D. Liability coverage for damages caused by a company's faulty product. Answer: B. Protection for a business against claims arising from mistakes made in providing cybersecurity advice. Explanation: Errors and omissions. EO coverage is designed to protect businesses from claims that arise due to mistakes, errors, or negligence in the services they provide. In the case of cyber insurance, this can include situations where a company that provides cybersecurity advice or services is sued for failing to deliver adequate protection or making mistakes that result in a breach. The other options refer to different types of coverage, such as first-party coverage, option A, or business interruption coverage, option C, neither of which are part of EO coverage. Question 9. Which of the following is NOT typically covered under a cyber insurance policy? A. Costs of data recovery after a cyber attack. B. Legal defense and settlement costs resulting from a data breach lawsuit. C. Physical property damage caused by a cyber attack. D. Losses resulting from business interruption due to a cyber event. Answer. C. Physical property damage caused by a cyber attack. Explanation. Cyber insurance primarily covers financial losses related to digital incidents such as data breaches, business interruptions, and costs related to the investigation and recovery from cyber attacks. Physical property damage, which is typically covered under property insurance, is not included in cyber insurance policies. Option A, B, and D are common coverages under cyber insurance policies addressing data recovery, legal costs, and business disruption caused by cyber events. Question 10. Which of the following is a key factor that underwriters consider when pricing a cyber insurance policy? A. The company's social media presence. B. The company's current security infrastructure and cybersecurity protocols. C. The size of the marketing budget. D. The geographic location of the company's headquarters. Answer. B. The company's current security infrastructure and cybersecurity protocols. Explanation. Underwriters use a variety of factors to determine the premium for a cyber insurance policy, with the company's cybersecurity posture being a significant factor. This includes evaluating the company's security protocols such as encryption, firewalls, multi-factor authentication, and external audits. A company with a strong security infrastructure is likely to receive more favorable terms as the risk of a cyber incident is lower. Social media presence, marketing budgets, and geographic location, options A, C, and D, are generally not key considerations in the underwriting process for cyber insurance. Question 11. Which of the following best describes the role of a cyber incident response plan in the context of a cyber insurance policy? A. It is a document that helps the company restore physical assets after a cyber attack. B. It outlines the steps the company will take to respond to a cyber attack, ensuring timely notification to the insurer. C. It defines the company's marketing strategy to recover from the reputational damage caused by a cyber attack. D. It provides legal defenses against cyber-related lawsuits. Answer. B. It outlines the steps the company will take to respond to a cyber attack, ensuring timely notification to the insurer. Explanation. A cyber incident response plan is a key component of a company's cybersecurity strategy. It outlines the procedures for detecting, responding to, and mitigating the effects of a cyber attack. It ensures that there is a clear process for notifying the insurer and other stakeholders in a timely manner, which is crucial for triggering coverage and minimizing business disruption. The plan does not typically cover physical assets, option A, marketing recovery, option C, or legal defense, option D, though it may include aspects of each in broader response actions. Question 12. Which of the following types of cyber risks is commonly excluded from coverage in standard cyber insurance policies? A. Data breaches involving sensitive, personal information. B. Financial loss due to phishing attacks. C. Cyber attacks caused by war or terrorism. D. Business interruption due to a ransomware attack. Answer. C. Cyber attacks caused by war or terrorism. Explanation. Most standard cyber insurance policies exclude coverage for damages caused by war or terrorism. This exclusion reflects the extreme nature of such events and their broader geopolitical impact. Data breaches, option A, phishing attacks, option B, and ransomware attacks, option D, are typically covered depending on the policy's terms. Question 13. What is the purpose of a sublimit in a cyber insurance policy? A. It caps the maximum coverage amount available for certain types of claims. B. It provides unlimited coverage for specific cyber risks. C. It reduces the policy's premium cost by excluding certain risks. D. It outlines the minimum required security measures for a business to qualify for coverage. Answer. A. It caps the maximum coverage amount available for certain types of claims. Explanation. A sublimit in a cyber insurance policy sets a maximum coverage amount for certain types of claims, such as for legal expenses, data recovery, or reputational damage. While a policy may have a general limit of liability, sublimits are used to limit the insurer's exposure on specific types of risks. It does not eliminate or reduce the policy's cost, option C, nor does it apply to security measures, option D. Option B is incorrect because sublimits reduce coverage, not provide unlimited amounts. Question 14. Which of the following is an example of first-party coverage in a cyber insurance policy? A. Legal fees incurred by a third-party claimant due to a data breach. B. Damages caused by a company's failure to comply with data protection regulations. C. Costs associated with restoring the company's data after a cyber attack. D. Lawsuit settlements resulting from a customer suing the company for a privacy violation. Answer: C. Costs associated with restoring the company's data after cyber attack. Explanation: first-party coverage refers to the costs incurred by the insured organization itself due to a cyber event. This includes expenses such as restoring data, business interruption losses, and costs to mitigate damage. Legal fees or lawsuit settlements, options A and D, are typically covered under third-party liability coverage, while compliance violations, option B, would typically be addressed separately from standard cyber insurance. Question 15. Which of the following is typically covered under cyber insurance's business interruption coverage? A. Losses due to a company's failure to secure customer data. B. Revenue loss due to downtime caused by a cyber attack. C. Fines imposed by a regulatory authority for a data breach. D. Legal expenses associated with defending against a customer lawsuit. Answer: B. Revenue loss due to downtime caused by a cyber attack. Explanation: business interruption coverage in a cyber insurance policy typically covers the revenue loss that a company suffers as a result of a cyber event that disrupts its ability to operate. This includes downtime caused by system failures, ransomware attacks, or other cyber incidents. Fines, option C, and legal expenses, option D, are typically not part of business interruption coverage, though they may be covered under different parts of the policy. Question 16, scenario-based. After cyber attack, a company discovers that its sensitive customer data was exposed. The company's cyber insurance policy includes coverage for data breach response costs, including legal fees and notification costs. The company is required to notify its customers and regulators within a set time period. What is the likely first step the company should take to begin utilizing its insurance coverage? A. Notify the insurer about the data breach incident immediately. B. Wait for the attackers to be apprehended before taking further action. C. Notify the public about the breach before contacting the insurer. D. Conduct a full internal audit before involving the insurer. Answer A. Notify the insurer about the data breach incident immediately. Explanation: the first step after cyber attack should be to notify the insurance provider as soon as possible. Most cyber insurance policies have strict notification requirements to ensure that coverage is provided. Delaying or waiting for the perpetrators to be apprehended, options B and C, can jeopardize coverage, while an internal audit, option D, may be helpful. It is not the priority in triggering insurance coverage for the incident. Question 17. Which of the following is a potential benefit of a cyber insurance policy with a claims-made policy structure? A. The policy will cover all cyber incidents regardless of when they occurred. B. The policy will only cover claims that are made during the policy period regardless of when the incident occurred. C. The policy will cover both the incident and any claims made after the policy expires. D. The policy eliminates the need for cyber incident reporting. Answer B. The policy will only cover claims that are made during the policy period, regardless of when the incident occurred. Explanation: in a claims-made policy, coverage applies to claims that are reported during the policy period, even if the incident occurred prior to the policy's start date. This type of policy requires that the insured report the claim while the policy is active, unlike an occurrence-based policy, which covers incidents that occurred during the policy period. Option A. A claims-made policy only covers claims made during the policy period. Option B. Question 18. What is the purpose of a retroactive date in a cyber insurance policy? A. It determines the date from which the coverage applies to incidents that occur. B. It marks the date on which the insurance policy was purchased. C. It sets the end date for the policy's coverage period. D. It determines the deductible amount for claims. Answer A. It determines the date from which the coverage applies to incidents that occur. Explanation: a retroactive date in a cyber insurance policy specifies the date from which incidents are covered. If an incident occurred before this date, it would not be covered under the policy even if the claim is made during the policy period. The retroactive date is used to limit the insurer's exposure to events that occurred before the policy was in effect. This is not related to the policy's purchase date, option B, end date, option C, or deductible, option D. Question 19. Which of the following scenarios is most likely to be covered by cyber insurance under a privacy liability endorsement? A. A company loses access to its internal data due to a ransomware attack. B. A company's employee shares personal data about clients without consent, leading to a privacy violation. C. A company experiences a network outage due to a hardware failure. D. A business suffers financial loss from a phishing scam. Answer: B. A company's employee shares personal data about clients without consent, leading to a privacy violation. Explanation: privacy liability coverage is designed to protect against claims related to the unauthorized disclosure of personal information, such as when a company's employee shares sensitive client data without consent. Option B. Ransomware attacks. Option A. Typically covered under other types of coverage, such as first-party or business interruption coverage. Network outages. Option C. And phishing scams. Option D. Are generally not covered under privacy liability endorsements, but may fall under different aspects of the policy. Question 20. Which of the following actions is most likely to lower a company's cyber insurance premium? A. Implementing stronger security measures such as encryption and firewalls. B. Reducing the number of employees accessing sensitive data. C. Limiting the amount of customer data stored by the company. D. All of the above. Answer: D. All of the above. Explanation: cyber insurers typically offer low premiums to companies that demonstrate strong cybersecurity practices. Implementing stronger security measures. Option A. Reducing access to sensitive data. Option B. And limiting the amount of customer data stored. Option C are all strategies that reduce a company's risk of a cyber attack or data breach. By reducing risk, a company can lower its insurance premium. Question 21. Which of the following is a key difference between first-party and third-party coverage in a cyber insurance policy? A. First-party coverage only applies to legal claims, while third-party coverage applies to financial losses. B. First-party coverage covers the insured organization's own losses, while third-party coverage covers claims from others. C. First-party coverage is typically less expensive than third-party coverage. D. First-party coverage applies only to data breaches, while third-party coverage applies to all other cyber risks. Answer: B. First-party coverage covers the insured organization's own losses, while third-party coverage covers claims from others. Explanation: first-party coverage helps the insured organization recover from its own financial losses resulting from a cyber event, such as restoring data or covering business interruption costs. Third-party coverage, on the other hand, protects the insured from claims made by external parties, such as customers or regulatory bodies, due to privacy breaches or negligence. Question 22. Which of the following is a common exclusion in cyber insurance policies regarding ransomware attacks? A. Payment of the ransom amount. B. Data restoration costs. C. Business interruption losses due to system downtime. D. Extortion costs related to the threat of data release. Answer: A. Payment of the ransom amount. Explanation: many cyber insurance policies exclude payment of the ransom itself from coverage, as insurers prefer to avoid incentivizing further criminal activity. However, data restoration costs, business interruption losses, and extortion-related costs, for instance, to prevent data release, are typically covered under the policy. Question 23. Scenario-based. A company recently suffered a data breach where customer information was exposed. The company's cyber insurance policy includes coverage for both data breach response and liability. What is the first action the company should take to ensure they comply with their insurance policy? A. Notify affected customers of the breach. B. Report the breach to the insurer. C. Analyze the cause of the breach. D. Publicly announce the breach to the media. Answer: B. Report the breach to the insurer. Explanation: the first step after a breach should always be to notify the insurer as soon as possible. Most cyber insurance policies require timely notification to trigger coverage, while notifying affected customers, option A, and analyzing the cause of the breach, option C, are important. They should follow the insurer notification. Publicly announcing the breach, option D, may be part of the response, but it's not the first priority for insurance compliance. Question 24. Which of the following risks is most commonly addressed by cyber extortion coverage in a cyber insurance policy? A. Financial losses resulting from fraud or theft by employees. B. Costs associated with responding to a cyber attack such as ransomware. C. Data recovery expenses following a data breach. D. Legal defense costs related to a cyber incident. Answer: B. Costs associated with responding to a cyber attack such as ransomware. Explanation: cyber extortion coverage specifically addresses costs related to extortion threats, including ransomware attacks. This may cover the cost of responding to the threat, such as paying the ransom or the expenses involved in preventing the data from being leaked. It typically does not cover fraud or theft by employees. Option A, data recovery. Option C, or legal defense. Option D. Question 25. What is a waiting period of a cyber insurance policy and how does it affect coverage? A. It defines the time during which the policyholder is not covered for any losses. B. It is the period during which a claim can be made for business interruption losses. C. It establishes the time period before the insurer starts covering losses after an attack. D. It is the period during which the insured must investigate the cause of the attack. Answer: C. It establishes the time period before the insurer starts covering losses after an attack. Explanation: the waiting period in a cyber insurance policy, often referred to as a deductible period, is the time between the occurrence of a cyber incident and when coverage for certain types of claims, such as business interruption, begins. This period is set to avoid covering minor disruptions that are not considered significant. Question 26. Which of the following factors is most likely to impact the cost of a cyber insurance policy? A. The company's overall financial performance. B. The level of security measures in place to prevent cyber incidents. C. The company's total assets. D. The company's workforce size. Answer: B. The level of security measures in place to prevent cyber incidents. Explanation: insurers evaluate the level of cybersecurity measures a company has implemented, such as encryption, firewalls, and employee training, as a way to determine the risk of a cyber event occurring. Companies with stronger cybersecurity practices are typically rewarded with lower premiums. Financial performance. Option A, assets. Option C, and workforce size. Option D may influence the cost but are not as directly tied to the risk of a cyber attack. Question 27. Which of the following is generally not covered under a typical cyber insurance policy? A. Costs to recover lost data. B. Liability for privacy violations affecting clients. C. Penalties and fines for failing to comply with data protection regulations. D. Business interruption losses due to a cyber event. Answer: C. Penalties and fines for failing to comply with data protection regulations. Explanation: cyber insurance typically does not cover penalties and fines imposed by regulatory bodies for non-compliance with data protection regulations, such as GDPR fines. However, it often covers recovery costs, liability for privacy violations, and business interruption losses caused by cyber incidents. Question 28. Which of the following is an example of a social engineering attack covered under cyber insurance? A. A hacker exploiting a vulnerability in software to access a company's network. B. A company's employees tricked into wiring funds to a fraudster posing as a vendor. C. A hacker deploys malware to lock company files. D. A company loses access to its network due to a hardware failure. Answer: B. A company's employees tricked into wiring funds to a fraudster posing as a vendor. Explanation: social engineering attacks manipulate individuals into revealing confidential information or taking actions that compromise security, such as transferring money or sharing login credentials. This type of attack is typically covered under cyber insurance, whereas hacking, option A, malware, option C, and hardware failure, option D, are different types of incidents. Question 29. What is the primary purpose of a retroactive coverage clause in a cyber insurance policy? A. To limit coverage to incidents occurring after the policy is purchased. B. To cover cyber incidents that occurred before the policy's start date if reported during the policy period. C. To provide coverage for incidents that occur after the policy is cancelled. D. To allow the insured to modify the policy's terms midterm. Answer: B. To cover cyber incidents that occurred before the policy's start date if reported during the policy period. Explanation: retroactive coverage provides protection for incidents that occurred before the policy's effective date, as long as the claim is reported while the policy is active. This clause is particularly useful for companies that are switching insurance providers and may have been exposed to risks prior to the new coverage. Question 30. Which of the following best describes the role of a forensic investigation coverage in a cyber insurance policy? A. It covers the cost of legal defense during a privacy lawsuit. B. It covers the cost of investigating how a cyber attack occurred. C. It provides coverage for fines related to non-compliance with data protection laws. D. It pays for the cost of restoring damaged physical assets after an attack. Answer: B. It covers the cost of investigating how a cyber attack occurred. Explanation: forensic investigation coverage is part of many cyber insurance policies and helps cover the costs of determining how a cyber attack or breach occurred. This may involve hiring forensic experts to analyze digital evidence, identify the source of the attack, and determine the extent of the damage. It does not cover legal defense option A, fines option C, or physical asset restoration option D.